I'm going to come right out and say it. People have an abusive relationship with the stock market. Today we're talking about why this is and what exactly you can do to change your beliefs and expectations. Most of the content we're covering today comes from MJ DeMarco's latest book, Unscripted: Life, Liberty, and the Pursuit of Entrepreneurship. It's a good book, it has a lot of very good ideas in it, and we're going to have a full review of the book in an upcoming video. As a former financial advisor, I have some thoughts personally on what he says on the topic of the stock market throughout the book, and I'm going to share those with you at the end of the video. What most financial books, gurus, authors, and other content creators in the niche say about the stock market is that you should be investing consistently over a long period of time, and this is going to net you a compounding positive rate of return that is going to put you in a much better place when you're ready to retire than you would be had you either spent the money or saved it for that entire length of time. Factually speaking, this is correct if you take the last 100 years of history as an example. DeMarco, however, refers to this as a scam. Why is that? In the book, he talks about having two kinds of wealth. The first is a wealth of money, and the second is a wealth of time. And he says, unless you have plenty of both, you're not very wealthy at all. And anyone who tries to tell you otherwise is just looking for a management fee off your hard-earned money, your hopes, and your dreams for the future. Yes, investing $500 a month at a 6% annual rate of return will net you $1 million+ at the end of the day. However, this also nets you a lot of chronic disease induced by stress from a job that statistics tell us you probably don't like very much at all. At the end of the day, it doesn't much matter whether you have $0 or $1 million in your bank account, you're equally dead either way. Accordingly, it also doesn't make that much sense to lavish yourself and your family with cars, boats, houses, and other expensive things that you need to pay off in dozens and dozens of monthly installments, as this backs you into a credit corner that is very hard to get yourself out of. True, you may have 2 awesome days on the weekend, but for your entire working life, 71% of your time is wasted, and I'm going to tell you what DeMarco's solution to that is after you press the like button. DeMarco's thesis states that everyone should be an entrepreneur, and he uses the rest of the book to explain why this is not necessarily as difficult, complicated, or moonshot sounding as we are often led to believe. Very briefly, here is how he thinks you should do this, and step number 1 is getting rid of your limiting beliefs. Sayings like, it takes money to make money, and, oh, I don't have the knowledge or skills or the degree to enter this line of business, those are just excuses that he says can be overcome using hard work, savvy, and due diligence. Step 2, after you get your brain in order, is to find some market opportunity where you can start to add some value. And to do this, he suggests consulting the internet. The internet, amongst other things, is a great big forum where people complain about things left, right, and center, and wherever you start to see concentrations of these complaints is market opportunity. The book goes on to talk about how to develop the business from start to finish using principles that are going to be the same whatever the technological situation is. Throughout the whole process, you should be investing all of the money that you would have put into the stock market into building and developing the business, with the goal at the end being to have a system that attracts users to a value proposition, delivers on that value proposition, is accountable for when it doesn't, and can grow mostly on its own without you having to be involved in every single fulfillment process. Fast forwarding a couple years down the line, hopefully, he says, you should have $1 million+ that you can start to put into another business he calls the capital rental system. DeMarco says to skip on the markets until you get to this point, because using growth stocks to fund your retirement is about as effective as using Vegas poker. You don't have a ton of control over the outcome, even when you have a high degree of skill at valuing assets. He advocates taking your big pot of money and investing it into 3 categories. The first is the income pot, the second is an optional house account, and the third is the risky investments. And each of these 3 pots should be filled up in order from first to last. The income pot is where you put things like dividend stocks, REITs, ETFs, and bond funds that pay a stable dividend from around 3 to a high of 7% without putting your base capital at too much risk. Anything greater than 7 is not super desirable because that means too much capital is returned to shareholders and not used to grow the business or keep it stable. Furthermore, each of the assets in this pool should have a good, consistent history of paying their dividends every month or every quarter, and hopefully raising their dividend yield on a regular basis as well. The key is having consistent income that you can live on and rely on to pay your lifestyle expenses. After those expenses have been paid and applicable taxes have been dealt with as well, you can start to fund the dream home pot. DeMarco says that dream homes are large and very expensive to maintain, and therefore they deserve their own investment account. Things like mutual funds and bond funds are great ways to ensure you have stable monthly income that doesn't put your base capital at risk and doesn't lead you to buying more house than you can afford at any one time. After the house is taken care of, then you can start to move on to the risky asset pool. This is where you put money for things like sports cars, options ETFs, or even an investment in your friend Dylan's t-shirt business.
They're going to be huge. Also medium and small.
And that's pretty much it. DeMarco says that in order to properly engage the stock market, start with the mindset of an entrepreneur. Embrace this mindset, get rid of your limiting beliefs, deliver real value to real people, then take the value that you've delivered, put it into the stock market, rent out your capital, and live off the returns as passive income. This has been DeMarco's take, and I personally think there is a lot to it. It's plain to see that there's lots of people in this world that are not happy either personally or financially. I've seen plenty of this with my former clients. Business, however, regardless of how the book portrays it, is fundamentally not right for some people because of the diversity of skills you need in order to be successful. It's not just industry knowledge either, which you can get through research and work experience. It's public speaking, leadership, sales, marketing, and an appetite for risk. It's not to say these things can't all be developed, but it does take a long time, and it needs to be done really before you get started. Otherwise, you risk losing your base investment because you took too much time in order to get from idea to your first sale. Furthermore, compound interest is not a scam. If you follow DeMarco's own advice and just buy the same assets that you would put in the income pool we just talked about, dividend stocks, ETFs, bond funds, etc., you can have $40,000 to $60,000 in passive yearly income by your mid-40s to early 50s, and at that point, starting a business is far less risky for you anyways. Now, it's not that I'm saying don't start a business earlier than that, but DeMarco makes the case in his book that starting a business is the only way to get to that point in life, which simply doesn't match up with the facts.
Discipline is the root of all good qualities.
And finally, if you don't have the skills to judge the value of assets on the open market, given all the publicly available information we have, your skills at judging the value of other things should really be in question. And this is a key thing that you need to be successful in any business you undertake. Again, not to say you cannot develop this skill over time, but MJ DeMarco has 2 university degrees, one in finance and the other in marketing, which he talks about in the book, but I don't think he gives those enough credit whatsoever for giving him that additional conceptual knowledge that allowed him to go much farther, much faster in his business than somebody who was starting from scratch. And that's it for this video. If you enjoyed what you saw here today, please feel free to click the subscribe button to support the channel. It really means a lot. But for now, thank you so much for watching, and I look forward to seeing you in the next one. Bye for now.